record this, so we make sure we have a recording. Because people always ask, they're like, "Where's the recording, man?"
Right.
So I want to make sure we have that for them. Hopefully, it seems like it's admitting people on its own, but it's gonna be a good call. I think we're gonna get right into it. We don't want to hold you too long. What part of the country are you in?
So I'm in Charlotte, North Carolina. I'm from Charlotte.
Okay. I knew it was the East Coast somewhere.
Oh, my sister's in the chat, Alicia.
How you doing, sister? So if you can just kind of give us an explanation of who you are. We already kind of know where you're from, but who is Sheablacbarbi?
So Sheablacbarbi, my name is April Spicer. So I work as a technical project manager. I just got my Scrum Master certification last year. So my last role was a Scrum Master. So I have a tech background. And before taking the options course, I was already doing investing a little bit on the side, like in TD Ameritrade, but I really didn't know what I was doing. So
I feel like, so how long were you investing before you started doing options?
So I got my TD Ameritrade account in 2017. I had got a Roth IRA and a traditional IRA there. And then I just put some money in there and I was just like, okay, let me like buy and sell Facebook and Apple. But I wasn't really making any money. I was only making like 100 here, maybe 300. And it was taking me a long time to make that money, a couple $100. So.
And so you did that for like 2 years?
Well, no, I didn't really do that for 2 years. I was just like doing that like for maybe, I don't know, 3 or 4 months. And then I stopped because I was like, I'm not really making the money. And I knew it was some way that I could make money when the stock market went down, but no one seemed to know. Like one of my friends was like, yeah, you can make money when the stock market goes down. I'm like, well, how? He's like, he didn't know. And then I called TD Ameritrade. I called customer service and I was like, because I was trying to figure it out and they didn't even know. And I was like, man, they don't know. Like, I was like, man. So then I just was doing other things like, you know, other hustles and working my own corporate job. And then I found your course and I was like, this is what I was looking for like 2 years ago.
So I think it's dope because it kind of speaks to the power of options, but it also kind of speaks to having experience in the space before you start trading options, because I think you can appreciate options a little bit more. So when you first started trading options, how were things different than when you were just trading stocks or investing in stocks?
So things were different because, well, when I first took the course, that was around the coronavirus time. So everything kind of crashed, like the airlines and the cruise lines. So I immediately like jumped on that, right? And I took out like 2,000, but dollars out of my account and just put it in a Robinhood, and then I just started trading. But yeah, it was different because I was like, you know, I'm making, you know, $100 every time, you know, it moves $1. So I started making money and I was like, man, I need to be really making, I need more money, like so I can get more gains.
How did you get your initial capital to start investing?
Well, I work a corporate job, so like I already have money and I have rental properties, so you know, I already have money in the bank. Like I'm one of those people, like I'm always saving. I'm like, I never pay full price for anything except for like cosmetics, and, you know, food. I'm always grinding. So yeah, I already had the capital. I started with a couple thousand because I really didn't want to like buy those like really cheap stocks or companies that just like those penny stocks or whatever. I was like, no, I'm just gonna buy like Facebook and Apple because I already like had the experience with that and I already watched those stocks. So I was already watching. So after.
Why is it important to invest in things that you've been watching?
because you know how the stock moves. And like, that's really, really important because if you're not like watching the stocks and you don't know how they move, it's like, you're not looking at the charts. I don't know, like I've never made any investment without looking at the charts. So before I took your course, you know, I was already looking at averages, you know, like 5 day, 10 days. Like I was already looking at charts, even though like I wasn't being super technical. But then when I got into options, I started you know, doing more research, and then I was looking at what Chris was doing and like the RSI indicator, and because I wasn't doing any of that when I first started options, and I was taking little losses here and there because I was buying when the RSI was too high. Um, yeah.
So your very first trade, what was the very first trade?
The very first trade, I was looking that up, and I think it was Facebook, and I made like $174. I think that's what it was. I like went all the way through my phone and was like screenshotting, and then yeah, I was making like 100 here, 200 here on Facebook.
How were you able to go from making the hundreds to making the thousands? Because you've been having some good $1,000 days.
Yeah, so basically what I did was like my strategy was to focus on companies that I already knew that were great companies, that were growing companies, just like what you taught in the course, right? Companies that don't have a lot of debt. So I was doing a lot of tech stocks. I was doing research on some stocks, like Crowd and some other stocks, but I was really focused on more of the companies that like we use every day. And I just kept flipping my money until I could afford like the more expensive stocks.
Mm-hmm.
And so then when I hit 7,000 with Amazon, it really, I could have made 15,000, but I was at this event and I wasn't watching my phone, and I was just like, man, let me just get out. So,
Mm-hmm.
so I just kept flipping because I started with 2,700, and then I made like 6 or 7,000, and then I lost Netflix because I played earnings, and I was like, man, that was
Netflix is bad on.
crazy. I lost like $1,900. But I didn't give myself enough time. Like you said in the course, like give yourself time after earnings. So
Yeah. That's very interesting. I like that so altogether, are you trading the same stocks? Like you just follow these same 5 stocks? Because, you know, some people, they're like, oh, well, this call out is popping, so I need to go run over there and make some money over there. How do you kind of play things?
I do not do that because I was in the trading community, and I was looking at a lot of stocks, and people were saying, I made this. And then, so I knew I shouldn't chase the stocks. But then I was like, you know, how am I going to be like watching like all these stocks? I mean, I have a watch list, but you know, at first, when I first was trading, I was trading like maybe 2 and 3 stocks at a time in options. Then one time I had like 5 stocks. I was like, whoa, I shouldn't be doing this. Like,
It's
you
too
know,
much, yeah.
that's like way too much. So then I was just like, you know what, I'm just going to do one stock. And then I just started like doing Shopify. And that's when I started making 1,000 here, 1,000 here, 2,000 here. And I just kind of stuck with that because I was like watching it a lot. But no, I don't hop on those trendy stock. I really go for the tech stock, but now tech is not doing good. So I need to be able to rotate into different sectors. So my plan is really to kind of, out of all like NASDAQ, you know, the Dow and the S&P, really just kind of have like a whole strategy of certain companies that I just watch. And that'd be perfect, you know.
So what are some things that you've done to become better at investing and trading?
Don't get emotional. That's really a good one. Not to get emotional with the trades, you know, because or just like, you know, not do all of the, like I have like a certain process that I do, you know, I'm looking at the news, I'm looking at the charts, I'm looking at the RSI, I'm looking at the 200 moving day average, but sometimes, you know, you log in and then you see it take off and then you just want to jump on it because, you know, it's just hype. It's just like with Tesla, like today, you know, it took off. I didn't jump in Tesla, but you know, you have that, like, I don't know, it's like a pull, you know, like an attraction. You want to do that, but that's not the best thing to do, really.
Yeah. I feel like when I see people making money in stocks I don't watch, I'm just like, good for you. Good job. But I'm still over here watching the stocks that I watch, investing in the stocks that I invest in, and I know it's going to come back to me. For the most part, outside of the individual trades that I do, my entire portfolio is in value plays. So my entire portfolio is in undervalued stocks that I feel like are going to do well over the long term because I bought them at such a discount. And so before tech got really, really hot, my stocks were doing really, really hot. I was up about $100,000. And when people started moving their money out of there and they started going into tech because what we call sector rotation, then I lost about 60 of that. And then this week I've made up about 30 of that back. And so my idea is that eventually it's going to come back. But when I saw everybody making money in Tesla and Netflix and all that good stuff, I was like, that's cool. But that's not what I'm focused on because a few different things. I have to stay focused on what I'm focused on, but also I don't want to get in the habit of chasing. I don't want to get in the habit of buying something just because somebody else bought it. You're just trying to ride their coattails, and a lot of times you get burned that way. I'm not a proponent of investing that way.
Right. I had invested in is it Nikola, like that stock with electrical trucks.
Right.
And so someone in the chat in the trading community put it up and I got in early and it went all the way up. I was like, oh my gosh, you know, that's the first time I've ever seen a stock just shoot up like a rocket. It was just crazy. But, you know, I was, you know, I didn't double down. I just did like, you know, one contract. But I was like, you know, I really shouldn't be doing these type of trades. I really need to be focused on like you said, undervalue. And I have like a portfolio with the buy and hold that I did that was undervalued, right? The coronavirus stock list. That I did. I did. Because you and Chris was talking about that. And I was like, let me move some money and TD Ameritrade and like, just like buy, you know. So a lot of those stocks I didn't even know anything about, but I doubled my money, over doubled. I think I put in 3,000 and it's up like 6,500.
That's crazy.
And then I bought a whole bunch of Tesla stock when it was at 400.
Wow.
And now it's way up.
So I feel like being in the space and having some success in the space makes you more prone to want to invest more in the space. Like back in the day when you're just getting a little $100, $200 here, it's like, whatever. But now that you're making big money, it's like, okay, well, let's see where else I can find opportunity. It's interesting because that's kind of always been my strategy. My strategy is how can I find the big returns in the stock market? Because they say they exist. On Wall Street, they're balling, driving Rolls Royces, wearing Rolexes. I was like, obviously there's some money here. And so that's where the value investing idea came from, because I realized like I can buy this at super cheap and double my money. And then also options, like I can buy something and have an astronomical return on the upside. So it's there if we just do it right.
Yeah, but like once I started trading options, I realized that like the real key is like, you know, really leveling like your money up, you know, to where you have, like if you have your own business and you can put 50K, like, you know, in a stock and just hold it and make 5% or 4%, you know? Mm-hmm. That's kind of where I want to be.
Yeah, I feel like that's true. It's like you like I had this whole conversation about 401ks and I was telling people like I know people who have 10,000 in their 401k and it's just sitting there. And I'm like, man, if you were to put that money to work aggressively in options, you could turn that 10K to 100K and put the 100K in your 401K. But don't put 10K in the 401K and expect it to grow to 100K, because you're going to be waiting for 50 years. And then who knows what the market's going to look like in 50 years. And that's what they want you to do. They want you to work for them for 50 years, do a little slave thing, and get your $100,000.
Right. Yeah. I feel like, with investing in options, it's a great way to maximize on the opportunity, but in the overall scheme of things, you want to have like multiple strategies,
Absolutely. Absolutely. So, let me get to my questions. How do you determine when you want to enter a trade? What are you looking for?
So I'm looking for if the stock is undervalued or is it overbought. If it's overbought, I'm not really going in. If I'm going in, it's more like a day trade type thing. And it's really like a hype thing, like, so-and-so company is partnered with so-and-so, and then it's just like some real big hype around it. So that's when I usually enter in. I usually look at the chart to see like, what the average is. And I really want to buy below the average price.
Like which average are you looking at? How many days?
Well, with option, I'm not really looking at a 200 because like with the coronavirus, if you look at that, it's going to be kind of skewed, right?
That's very true.
Yeah. So that's not really gonna, so I usually go back, I would say like the last 30 days, or I usually go 30 days, 10 days, 5 days. Like I just kind of like estimate and look.
So you have a smaller moving average and you want it to be underneath that line.
Yeah, usually. Mm-hmm.
Why is that?
I really watch it because if you're buying below, then you're placing a call, you're assuming it's going to go up. You want to have enough room for your gains. So, you don't want to buy like if like Apple right now is like 450, I don't really want to buy Apple right now at 450. If it's at the all-time high,
I agree. I avoid that stuff because statistically, it's more likely to correct downwards than it is to continue to run up. Once you start bumping the 52-week high and you're setting new highs, I've found that sometimes you're going to walk into a situation where some big trader or some big bank decides they want to take profits. And when they take profits, they're taking your profit. So they're going to cash out and then your stock price is going to go down. So that's why I'm super anti about buying the top. Even if like, I feel like chasing the top is kind of the opposite of what I do in regard to like value investing, because if you're chasing the top, there's not that much further for it to go up, but there's so much further for it to fall. But if you're buying the bottom, there's so much further for it to go up, but it can only really go down so much further, especially if you're buying after it's plummeted substantially 1 or 2 times. And you notice it's starting to kind of recover a little bit. Typically, that's when I come in. So the same is true on the opposite. The logic is the same. Right. So how do you determine when you want to take profit? Because I see that question asked a lot. They're like, well, how much money is enough money in? When do I know when I should sell?
Well, that's what they say, that you should be fearful when the stock is going up, right? Like that it's gonna drop. So like, and you don't want to be greedy. And I hear so many people saying, don't be greedy. But the thing is that like certain stocks move, like, like Tesla, like did how many, like $150, or Shopify, they're moving like $20, $30 a day. So, depending on like which stock you get, I'm kind of like basing it off of that and like how fast the stock moves on average. And then I'll be like, okay, let me get out, because especially like if, like, let's say if I get Amazon averages like, $30, $40 a day, like on the uptrend. And if it's up higher than that, I need to be getting out, because it's going to go down. I'm assuming it's going to go down. To me, like I was telling one guy that's in the trading community, it's like the whole key is to like not lose money.
Right.
You know, that's the whole key, is to like not lose money. Because if you're constantly in options, you're going to be making money. You're going to be making 1,000 here, 5,000 here, you know, whatever. But you don't want to lose. And so you want to get out not to lose. And the thing is, I remember like when I was like trading in the beginning, like with Netflix, when earnings came and it didn't make earnings, I was thinking, okay, well, at least I'll break even. Like it's got to like come back, and it never did. And that's when I was like, man, this is, and I had a whole extra week after earnings, and so
It didn't come back.
no, I don't know. It didn't. It did not. With you know, with time decay too. Like, so I broke even, you know, maybe 3 or 4 times in the beginning, but now like when I'm trading, I really don't. I don't wait around.
Right. Because it's just like you can make money quick, you can also lose money quick.
Really quick. You can lose money really fast.
And it doesn't take much movement for you to lose money. Just like it takes a lot of movement to make money, but you never know, because a lot of it is like statistics and odds based. So if it drops a certain amount of money, you don't have enough time left in that contract, it could go to zero. It can go to negative 90%. So when you do get that opportunity and you get some money, capitalize on it immediately.
And another thing too, like I see people doing, which I haven't done, like they'll buy like 2 and 3, 4 contracts, and they'll get like a cheaper stock, right? And they'll just wait for it to move up $1 or 2, you know. I don't really do that type of strategy.
Why not?
And that's and that's the thing. I think because I'm like one of those investors, like I really like my stocks to like move. Like I don't want to get a stock where it's like, oh, the stock only moves like $2 or $3 a day, unless it's like, you know, an ETF and I got like, you know, 50,000 in there. I'm just like trying to be conservative. But if I'm like, okay, my goal is $1,000 a week. I'm just personally, I'm not going to go like double up 2, 3 contracts and like hope and pray it moves up $2, because, you know, I don't know. Maybe I'll try it one day, but I have not tried that strategy.
You just found more success buying larger stocks that are going to move more, and just making sure that you're on the right side of the move. Interesting. I like it. Yeah. That's good feedback. Let's see. What was your most successful trade?
So my most successful trade was Amazon. I made like $7,075. I think I had it for like 2 days. That was the one I was telling you I could have made like 15 grand, but like I was in my car, like I was out of town, and I wasn't watching it, and I couldn't be on my phone, and I was like, oh man, like, so, but I still got out like around 3:30. So, you know, that's the biggest one. Mm-hmm. And Amazon, like, it's expensive. I heard you talk about how expensive Amazon was. And like, and I also feel like, you know, your risk tolerance is very important. You need to understand what your risk tolerance is. Mm-hmm. For me, I feel like my risk tolerance in the beginning was like too high. Like I was just like, I was really like running it up, you know, doing like all these risky trades in the beginning. And getting lucky and then breaking even, like, oh, thank God I didn't lose any money. Like, and I was like, I shouldn't be trading like this. This is, you know, so, yeah, Amazon was good. Amazon's okay, you know, but even after that, like looking at the market now, like I'm waiting till like next Tuesday to get in. You know.
Well, I feel like for like during that time period, tech kind of got left behind. And so like everybody was doing well except for tech. This is the time when a lot of those undervalued, because we were kind of betting on the world coming back, right? So everybody was like, oh yeah, in July, everything's going to open up. It's going to be wonderful again. And so all the stocks kind of ran up into that period. And then July hit and they're like, nah, it's still not time. And so then people pulled their money out of that sector and they put it back into tech. And then tech ran up for like a good 3 weeks, 4 weeks. And then it got to the top of its chart. And then it kind of fell down because even Tesla, before it started flying, like it was down pretty substantially the past few days.
It was down. I was looking at it like even last week, it just seemed like it was flat. It wasn't really like going anywhere.
Yeah.
And then they did that stock split. So
that's why I feel like it's important to tune into the news just to kind of see what's going on. I still feel like people have to focus on trying to be ahead of the news as opposed to taking their cues from the news. I just want the news to kind of confirm my thoughts. And so as you're taking in information, you kind of want to come up with your own thesis for what's going to happen in the future. And then as news is coming out.
How do you figure that out? Like, are you paying for are you paying for information before it gets out? Because I'm not paying for anything like Market Watch or like all those, outlets. I'm not paying any extra money.
So I would say the way I do it is I've been around the block a while. So I've been investing since, maybe about 10 years. And so like I told people like I was working for Edward Jones, Series 7, all that stuff. And so I saw the last recession like up close. I was in the market. I was working with other larger financial advisors who had bigger clientele. And so like I just saw stuff. And so after a while, you just get a kind of sense of things that are going on. And so for me, I'm never really reading the news to find out what's going on. I'm always reading the news to say, okay, so if this is happening, logically, what's the next step? We don't know what the next step is, but what's logically the next step? Are they going to have to find a solution to this problem? More than likely. So for example, with like Chipotle or with BP, when these companies hit times of crisis, they have so much money and so much resource and so much manpower. Like these people hire the best of the best of the best. They're hiring people from Stanford, Harvard, all these really great schools to solve problems for them. So I'm just banking that they're going to solve the problem. I don't know how they're going to solve the problem. I just know they're going to have to solve it somehow. So for example, with SPG, I don't know how they're going to solve that problem. I just know that they're going to have to solve it. And there's a lot of upside in that solution. And so even if it doesn't go back to where it fell from, as long as it goes near where it fell from, I'm happy. With Tesla, you kind of have to think like you have to kind of use vision in a sense. It's like, where do you think Tesla's going to take this company? Where do you think Apple's going to take their company? Where do you think Amazon, all these huge companies, are they going to continue to grow? Probably so. They're probably only going to get bigger and stronger and better. And so I would just say that like a part of investing is just having vision and foresight. You have to have foresight, and you don't even know how it's going to happen. You just that's the upside of investing, in my opinion.
Great answer.
Let's see. So what other things are you taking in? Like what books have you read? What maybe YouTube videos or what other courses have you been watching that have helped you out?
I'm reading The Millionaire Next Door right now. I really like that book because it kind of gives me it's giving me a different perspective on just like the lifestyle of millionaires. I knew that, there's millionaires out here that are frugal and everything like that, but the statistics was like, I was kind of shocked on that for real. Like, wow, I'm not really on YouTube. I'm thinking about.
That's all I watch is YouTube.
I'm not on there. I'm on there, but not for stock.
Right.
Not for investing.
Right. Sometimes those videos are boring and they're not very helpful. They're kind of long and drawn out.
Overcomplicate things, and
they do overcomplicate things.
That's why I don't watch them. Yep,
I agree with that. It's so funny. People are like, "Oh, you could learn it on YouTube." I'm like, "Okay, try." If you could learn on YouTube, you would have been doing it. Like,
I was looking on YouTube before I got your course. Yeah, I was looking on YouTube, like trying to figure out what to do, but everyone's like hiding information. Click this monthly subscription and all this, and I'm like, this is so. No, I think your course is like, it was the best thing for sure.
We have more content coming. I'm working with Wale. He's going to be doing an advanced options course coming soon. Um, Excited about that. He's excited about that. He's been putting a lot of work into it. Um, I think that's all the questions that I have. So we'll open it up to the floor, and if I have other questions, I'll ask them as we go along. But you guys can go ahead and slide in the chat. I think um, somebody said protect capital at all costs, or protect capital above all else. Um, any questions? Drop them in. Anything that you guys want to ask? You've been having consistent wins. And a lot of people, that's one of their things is like consistency. So how are you able to find consistency in what you're doing?
Uh, consistency. I think it just comes from me. I guess, like you said, it's that vision and foresight. You know, I'm looking at the news, I'm doing research, I'm seeing like what's like what companies are doing really good, what's not doing good. And so I do puts and calls, but mostly calls. Oh,
Are you going to read it? He says,
and he
are
said my
you,
day trading or swing trading. Um, yeah, sometimes I day trade, but not a lot. You know, I don't go in like saying, "Oh, I want to day trade." I mean, sometimes I do, but usually,
so
like, mhm.
why is that? Why don't you day trade?
I think it's like that mental. It's the mentality of like, okay, I just want a quick win. I just want that like quick thousand or quick, $500 instead of like saying, okay, let me look at this week and let me see what companies or what's companies are going into earnings. You know, I kind of avoid earnings. So sometimes I'll look at that to see, or I'll buy a stock that's in earnings, but I won't play out earnings. I'll get out before. But no, I go in thinking that like, you know, it's the stock is gonna do good for at least that week,
Yeah.
you know, or it's
Honestly,
a tank.
I feel like if you avoid earnings, it gives you more predictability because you're not going to get as strong of a drop. And so like with earnings, you could get hammered 10-15%. You lose all your money. If it's just a standard like swing or day trade, you might lose a percent or two one day, a percent or two the next day, but it's not a dramatic drop that's going to kill your portfolio instantaneously or kill your holding instantaneously. So I can understand the logic of avoiding earnings.
And I think
Um,
I've played Tesla in a day trade before, you know, just in and out. You know, I've done that. So
Tesla is a unique stock. I've always loved Tesla. I used to own Tesla when it was like $100 stock. I sold it. I made a lot of money. Um, and it's funny because it was on an earnings play. It was like my first time making real big money in the stock market. This was like 2000 and maybe 15, something like that. Maybe it was like 2015. Let's say hypothetically 2015, and
mhm.
like they were a very cheap stock, like $75, and their reported earnings they went up to like over $100. So something crazy like that. And I this is like my first time making big money, and I wasn't as old as I am now. I was like early 20s, and I made like $2,000 overnight or something like that. And I was
Yeah,
like, what? $2,000?
I know that's
So
lit. Yeah.
and now it's trading at $1,500. If I just would have held what I had there, who knows what I would have had. So
Yeah, I
man,
think I'm up like 150, 160% on Tesla, but yeah, yeah, I don't hold. Oh, the next part of the question is like, do I hold for several weeks? I don't hold for more than like 3 weeks, but that's because I'm not like, you know, if I was putting in like in one trade, like, you know, $10,000 or like 20,000, you know, because you know it costs more the more you hold it, you know, the longer.
mm-hmm.
So I'm not really I'm not doing that that kind of money is over in the buy and hold. So, yeah.
So as you're making money, are you sweeping money into your long-term portfolio, or are you doubling and tripling and quadrupling up, or are you doing a combination of both?
Yeah, I'm doing both. Like I've quadrupled, like, well, yeah. Well, the goal is not for me to like just be making money and then putting it into that account that I have, because that coronavirus stock, I moved some money in there, but not really. I just have it sitting in Robinhood. So I need to, I guess, do something
At
with.
least it's good. It's good problems to have. And you might not find, like, a lot of times we feel like we have to invest every dollar we have, and you might not see an opportunity. But when you do see an opportunity, it's cool to have cash. I did that recently. I have a bunch of different investment accounts now. So I have like a Webull account, and that's kind of become my like options account, only because I didn't have success trading, because my Robinhood kind of has like my long-term money, and then my Webull has my trading money. And I started trying to trade in the Robinhood account because it's just easier to buy options in Robinhood. And I found that like I was just all over the place because I had way too many positions open. And I feel like having way too many positions open it's too many variables, too much movement. You're prone to just make a mistake. And so that's why like I really do one or two at a time now. I'm not trying to be all over the board because I got to have my focus on those two stocks in that moment. And so I also have another like an IRA, and in my individual retirement account, I had a few thousand like that I could put to work, and I saw an opportunity, and I was like, "Cool, I have $5,000. Let's put that $5,000 on that stock right there," and I think it'll play out. But I think that's just like general investment advice. Like so many people feel like they have to be trading and making money all the time. When you don't, you need to find an opportunity. Make sure you find an opportunity. Don't try to create an opportunity where there is no opportunity. So sometimes you got to sit in cash until you find something that's like, that's it. That's what I'm going to buy.
I kind of go off of like what my spirit tells me. Like if it's saying like don't go in the market, like I just won't go in. Like I don't, I just got to go off my gut instinct. So I don't trade. Like I don't feel like I need to be trading like all day every day. So that's really good advice.
Yeah.
For sure.
It's so funny. I was on Twitter once and somebody was like, yeah, the market's down today. Are y'all making money? Are you making money? He's like, I think real traders are people who make money every day. And I was like, I don't care what you think a real trader is. Like, I'm not here to become anointed in your eyes. Like, you
That's
gotta, you
black.
gotta.
That's black Twitter, right? Is that?
It was a combination. I think it might have been somebody who kind of drifted into like Twitter.
Yeah, and those people saying those comments, they're not even investing like that. That's the whole thing, I don't, I try to trade every week, but if I don't, like if it's well, right now I'm trying to see what's going on with the stimulus package. So, looking at the government and all that. But no, I think it's good as an investor to like invest long term, I have a portfolio of like an ETF portfolio. I'm getting um, dividends. I have a lot of things kind of going on, but I want to get better. I want to get better at options. I want to learn more specifically with the chart and that those other indicators. I'm not like super technical with it, but
Yeah. It's funny because I feel like the group has motivated me to get even better.
Mhm.
So I'm just like, I gotta brush up on my skills. I gotta get stronger. I gotta get more solid, which is a good thing. This happened to me a few times in my life where I've hopped out in like a leadership role and you're like, well, bro, like you got to get some books, you got to watch some courses, you got to do what you got to do to step your skills up. And also, quite honestly, it's been the way that I've been able to like accumulate my first big money. Like I told people, like that's how I bought the ring for my wife. That's how I was able to pay off credit card debt. And so like there's so many cool things that you could be doing as you're kind of investing in options because the opportunity is so lucrative if you do it right and if you're good at it. Emphasis on being good at it, and people need to learn that it's a skill. And so yeah, you learned it 1 week. If you're not killing it week 2, that doesn't mean anything. I think that April had an advantage because she already had been investing for so long. And so she didn't realize she was getting experience in the market, but she was getting experience in the market. And so if you are completely new to stocks, if you're completely new to options, you gotta put the time in. It's like Eric Thomas says, it takes 18 years to be 18 years old. You don't get to just skip it because you took a course on being 18 years old. You still got to put in that time. You still got to put in that work.
I feel like too, you also have to like, you need to be okay with taking a few L's, you know? You need to be okay with that. Like, you need to be okay. Like, you might make $500 in this option, but maybe the next trade you might lose 200. I mean, are you going to stop trading? Because it's like, no, you need to get better. So you have to learn from your mistakes. I think, like, you know, my sister's in here and I was like, you know, me and her talking, I'm like, when are you going to place your first trade in Robinhood? She's like, okay, I'm going to. And then I have people on Instagram, like this one lady, she's like, yeah, I've been doing more research. She's like, well, how long? She's like, she asked me like, how long have you been researching? I was like, I just jumped in. Like I took the course, I just jumped in, you know. You can't research like 1 month, 2 months, 3 months, 4 months. You're not placing no trades, then it's like, okay, you got to take action. And it's all about that fear, like being fearless, you know? Because when you hungry, you like, I got to get this money, you know, I got to get this bag. So like.
That's one thing I noticed about you. It seems like you are hungry. It seems like you want it.
Oh, I really do want it, Ty. Like when I started making like that 1,000 on Tesla, I was like, yo, I need like more money. I need more money. I need like, you know, 100,000 in my options trade account. And so like, I'm like, okay, that's why like I started my own online business. You know, so I'm about to start selling watches. I got this women's collection because I'm like,
I
you
saw
know,
that.
e-commerce.
What's your website?
My website is called, it's savoirwatches.com. It's on my Instagram because I have an Instagram page for my watches, and we just launched last week, and then I got the pre-orders now on the site, but I'm gonna be shipping out within the next 2 weeks. So
nice. I'm gonna get one of those. Are those women's watches or unisex?
those are women's, but I'm gonna do a men's collection. I'm working on that too.
All right. I gotta get one from my lady. I gotta support. So I don't see any more questions, but where can they find you on social media, and where other places can they contact you, and where can they support whatever you have going on?
So you can find me on Instagram at Sheablacbarbi. You can always DM me any questions that you have. I'm here to help. And then also too, my website with the what should I put it in the chat or I don't know, but
Whatever, do both. Put it in, do what you got to do.
I'll put it in the chat.
Oh, somebody your sister typed it in for you.
Oh yeah, yeah. You. Yeah, that's my website.
Shoot me an ad and I'm gonna put it on the Todd Capital page, and we'll promote your business and get you some orders. So whatever content you have, we'll get that up there for you. So this is the MVP Options Community interview series. This is the second one that we've done. Thank you for coming on. Thank you for giving the people some game. I think you gave them some insight, because you have to make it real. Sometimes people just see the numbers and they see a little screen name and they don't know it's real people with real jobs, with real all this stuff that are doing this, and that makes it real for them. I think it's possible for them too, but we just have to have that perspective, and we have to be willing to take our L's, as you said, and learn. So I want us all to win. That's what we do this for. The goal isn't just to like teach you something and walk away. The goal is to teach you something and then help you be successful with what we taught you. So I hope that we're doing just that. We have multiple channels inside of the community. You can ask questions. We have people there to answer those questions. We have people there to give you maybe some investment ideas as well. And I'm there as well. So you can catch me on the TC Options Community channel. That's kind of where I reside. Thank you guys all for coming and taking some time out of your night to learn. and I'll see you in the community.
Thank you guys
All right.
for having me.
Have a good night.
Good night.